everyone, how are you all doing? This is Sachin Nachnani welcoming you back to my YouTube channel. Firstly, I wish you all a very happy Janmashtami. I hope that Lord Krishna fills your life with good health, wealth, and happiness. It's been a few days since my last video, but as always, I would like to share important highlights from that last video, which was presented just a day before the RBI policy. Now, specifically, I had said that there may not be a rate cut and it won't be taken negatively if RBI maintains an accommodative stance. Moreover, moratorium extension may not be announced and a one time restructuring scheme announcement is possible. Friends, I am happy to share that the RBI policy announcements were exactly on the expected lines and so was the market reaction. Do check out the video in the link above to understand the analysis. Now let's do the option chain analysis for 12th of August, that's Wednesday, starting with Nifty, which closed at 11,322, up by 52 points, while Nifty futures closed at 11,344, which is a premium of 22 points. Nifty is still put heavy, but just marginally. On the put side, 11,000 continues to have the highest open interest, followed by 11,200. Highest open interest addition has taken place at 11,300 strike. And in my opinion, that's fairly aggressive put writing, but it's being done just to pocket the premium for one day. This strategy will be profitable only if Nifty gaps up or opens just around today's closing level. But in case Nifty gaps down, then these put writers can have a tough time. Next highest open interest addition has taken place at 11,050 level, and that in my view is just a hedging strategy. Across so many strikes, you can see unwinding taking place, and that's okay because the premiums are so low that it is better to shift to next week's series. On the call side, 11,500 continues to have the highest open interest, followed by 11,400 strike, and that has also witnessed the highest amount of open interest addition today. Unlike the put side, call side has not witnessed so much of unwinding. In fact, across most strikes, it has witnessed a good amount of open interest addition, which is relatively higher as compared to the open interest addition on the put side. The moment you look at the chart of Nifty and you notice these small little candles which are known as doji in candlestick charting. Now, doji means indecisiveness. If you have seen my last video, you will remember me saying about a near term trend being formed after the formation of a doji candle. But it is strange that though a trend has been formed on the upside and Nifty has rallied by over 200 points over the last 4 days, all the candles that have got formed are doji. Friends, this is not a sign of strength in the markets. If anything, it may actually mean that distribution is happening at higher levels. Smart money is exiting while retailers are getting trapped at the top. Well, if you all are buying more at these levels, then let me give you a word of caution. Don't buy anything fresh here. Instead, it is best to book profits from your trading longs and for some time sit on cash to get good trading opportunities at lower levels. Moreover, look at the volumes. It is all below the average of last 20 days. Not a single day of volume during the rally is matching the volumes during the fall. The volume is lower on all days as compared to these volumes. Isn't it becoming more obvious now that this is distribution happening? Well, it's not that from tomorrow onwards Nifty will fall sharply, but it is quite possible that a slow and steady decline can happen from here unless Nifty closes above 11,400 level, that too with good volumes. Moreover, we can see that Nifty continues to face resistance around the 11,300 zone. So, in my view, it is best to avoid going long. Looking at the open interest addition on the call side and the analysis of charts, it's only obvious that I will be looking to sell call options. It's best to sell only call options, that too from 11,400 levels and above. The premiums that you're seeing right now the same may not be available tomorrow morning, and that's because it will be just be one day before Thursday session. But still, it would be worth selling them for just 2 days. If Nifty goes down below 11,300 and sustains there for some time, then aggressive traders can even sell the 11,300 call option. Only if there is a sharp fall will it make sense to buy put options, and that too would depend on what is the prevailing level of Nifty at that point of time. But I would definitely avoid selling at this point of time. Now coming to Bank Nifty, it had a very strong day today. It closed up by 327 points or almost 1.5%. It has outperformed Nifty today by over 1%. That is, Nifty today gained only 0.46%, whereas Bank Nifty went up by 1.5%, thanks largely to the rally in Axis Bank and in most other private sector banks. Bank Nifty futures is trading at a premium of almost 70 points. Despite the rally, Bank Nifty continues to be just marginally calls heavy. On the put side, 22,000 continues to have the highest open interest position as also the highest amount of open interest addition today. Next highest open interest is at 21,500 strike. Some unwinding has taken place at lower strikes, but that is primarily because of the low premium, whereas Bank Nifty has witnessed decent amount of open interest addition also across many strikes between 21,500 and 22,500. On the call side, 22,500 has the highest open interest position, followed by 23,000 strike. Now, decent open interest addition has taken place across strikes from 22,300 to 23,500 strikes. When we look at the chart of Bank Nifty and compare the rally of last 4 days, we can see the difference in comparison to Nifty. Bank Nifty has actually gained good strength and the rally has been fairly strong. In fact, unlike before, Bank Nifty has now started outperforming Nifty. Though, of course, there's no denying that it continues to be way below the 200-day moving average. Moreover, the rally has been supported by good volumes. In fact, the volumes have been slightly higher than the 20-day average also in some cases. But Bank Nifty continues to face resistance at the 23,000 level, and only above it will we look at a strong momentum. On the downside, of course, 21,000 area has turned out to be a good support zone for Bank Nifty. Looking at the range bound moves in Bank Nifty, I am inclined to sell both put and call options in Bank Nifty. So the strategy over here is different as compared to Nifty. I will look to sell the 22,000 put option and the 23,000 call option. Though of course the premium is very less on the call side. In fact, if the strength in Bank Nifty continues tomorrow also, then the premiums can go up, and the other possibility is that I can even look to buy the call options over here if there is a rally. Moreover, I won't be surprised to see the outperformance of Bank Nifty continue over Nifty for the next few days. So again, a simple strategy here: sell both put and call options for Bank Nifty. That's it from my side for today, friends. Take good care of yourself and your family. Stay home, stay safe, and gain knowledge.
Do like and share this video, subscribe to my channel and click the bell icon. You can reach out to me on Twitter, Insta, LinkedIn and of course YouTube.